I was really expecting a dovish Draghi, but honestly, he surprised us towards the downside with with his recon of quantitative easing not being enough, okay, to boost the economy. He downgraded inflation expectations pretty much as we were discussing previously. And as you can see across the board, the euro is the one suffering the most. Of course, dragging Swiss and gold with it, but the rest of the market is in wait-and-see mode ahead of payrolls, of course, which we are going to cover also live tomorrow. And anyway, I do believe that the situation in Europe is pretty awful, economically meaning, and that regardless the Fed decides to raise rates in September or in December, the imbalance between both central banks will continue to favor the downside in the euro dollar. Right? The euro is deep into quantitative easing and talking about extending. The ES is talking about rising rates. It does not matter to me if it would be this month or next. The fact is that the economy's imbalance are clear and the central bank policies are also clear. So I still do believe that the euro has little chances to see wild upward rallies as we have witnessed for itself, right? We have external factors doing that. It's actually about to break 111, and I would expect, as I said previously, a decline down to 1050, 1080 the most for today, and the market enter later in the year's afternoon into wait-and-see mode. And that's pretty much it.
Thank you, Val, and now sorry, continue.
No, nothing.
Okay, thank you, Valeria. And now, what do you think? Now is the time of our special guest, the commenter of the speaker, our guest, Yohay Elam. What do you think about that? What did you see today, and what do you expect?
Well, I was always a fan of Mario Draghi, and I think it's one of his best shows. He usually prefers to move markets without acting, and he acts only when it's really exhausted all the other tools. He also needs to get the people in the ECB, especially the Germans, behind him. So with the small tweak showing he's ready to act, and with lower forecasts that, well, they match reality, he managed to lower the euro. From here in the next few hours, I think we'll see some kind of stabilization, maybe a very small bounce back up. I think it'll be a dead cat bounce, not a real one. And everything, the next really big moves, of course, depend on what's going to happen tomorrow with the NFP. The Fed is data dependent, so are markets. If we have over 200,000, I think the fall of the euro is going to extend. If we have a disappointing one under 200,000, we're going to probably have a bounce. But in general, as Valeria said, there's more downside expected to the euro and more upside to the dollar because of this monetary policy divergence. Once the Fed does hike, and I still believe there's a chance it'll happen in 2 weeks' time in September, it'll be behind us. It'll be a dovish rate hike with some kind of promise not to raise the rates further on. And I believe that maybe a month after the rate hike, we might begin to see a change of course. But in the more near-term future, I remain euro-dollar dove. Parity, I'm not a parity bear, but euro-dollar has currently from 111.20, it has a lot to move down without getting close to parity, and I think it'll begin its move down soon.
Okay, thank you, Yohay. And now is the turn of our singer, presenter, and live analysis from Anchor, Dale Pinkert. What do you think,
Mauricio, if you could show my chart right here, I'll give you a visual on the euro. It kind of lines up with what Larian and Alienovich says. I was looking for a C wave here on this pullback back to the upside now that we violated these lows. Looks to me around 109.5, next significant level for the euro in the coming days.